What's up guys? Welcome back to Maniba Invests. On this channel, I will be helping you make smart investment choices by doing extensive research and bringing you the best cryptocurrencies and stocks to add to your portfolio. If you are ready to take the next step in your journey to financial freedom, then make sure to smash that like button, subscribe, and press the bell icon. This really helps out the channel and tells YouTube to push this community to other like-minded investors. The stocks I'll be talking about in this video have massive upside potential and can be a great fit for your portfolio. Before we start, I do want to mention that I have absolutely no affiliations with any of the companies I'll be talking about. As such, my analysis and research is completely free from bias. First, let's do a quick recap of how our picks for the month of May have performed. We talked about Outlook Therapeutics on May 8th, which was a Saturday, so had you bought it on the following Monday, it was trading at $1.98. Since then, we've seen a nice gain of 37%, and it's currently trading at $2.71. Another stock that we talked about on this channel was Ideanomics, or IDEX. Had you bought this on May 10th, we have seen a nice gain of almost 32%. Again, we've made some nice profits off of these two. Now, let's talk about the best stocks to buy in June. The first stock on my list is Sea Limited, ticker symbol SE. As of June 1st, it's trading at $257.20. The company began as a mobile game developer, but strategically expanded its offerings and now hosts a full-fledged digital empire in Southeast Asia. That includes mobile gaming, online retail, digital payments, esports, and more. If you are looking to diversify your investment portfolio and hedge against your American holdings, then Sea Limited is the perfect company. It has multiple sources of income and has already established itself as a leader in Southeast Asia. I've invested my money into Sea Limited since it gives me a lot of exposure to Southeast Asia's booming tech sector. So let's talk about Sea Limited's different revenue sources, how it has performed in the past, and how I anticipate it will perform in the future. Sea Limited's digital sales site, Shopee, is the largest e-commerce platform in terms of gross merchandise volume in Southeast Asia and Taiwan. During the quarter, Shopee's gross orders rose 153% to 1.1 billion, while its gross merchandise volume increased 103% to 12.6 billion. Those numbers put it comfortably ahead of Alibaba's Lazada as the largest e-commerce company in Southeast Asia. Shopee is still not profitable, but the total losses per order has been reducing each year, which is a green light for investors. Looking at the Shopee's fourth quarter earning reports, you can see that they are improving their EBITDA each year. Adjusted EBITDA represents 65.5% of bookings for the fourth quarter of 2020, compared to 55.5% for the fourth quarter of 2019. If you're not sure what EBITDA is, it stands for earnings before interest, taxes, depreciation, and amortization, and is used to evaluate a company's operating performance. Second source of income for Sea Limited is its mobile game developer and publisher company called Garena. Garena currently has a global hit on its hand with Free Fire. The popular game has expanded beyond Sea Limited's core market and is now available in 130 countries worldwide with large and growing user bases. Free Fire's popularity boosted Sea Digital's entertainment revenue by 78% to $20 billion in 2020. Its total bookings jumped 80% to 3.2 billion. Its number of quarterly paying users also increased 124% to 79.8 million. Garena has great potential for the future. Its rising percentage of paid users indicates it's still gaining momentum, and Garena is already testing out an enhanced successor, Free Fire Max, to prolong the game's lifecycle as it develops new titles. Sea Limited has performed great so far, and will be continuing its positive trajectory, which makes it a great long-term investment. The stock can see a lot of short-term volatility as a big portion of Sea Limited's revenue is coming from a hit mobile game, and interest in the game could wear out over time. Just be wary of this when you invest your money. The next stock on my list is OReilly Automotive, ticker symbol ORLY. It's a chain of 5,600 stores that sells automotive parts. The attraction of this stock is its consistency. O'Reilly is a beast of consistency. It has rattled off 28 consecutive years of positive returns, and it's going to be easy to stretch that run to 29 years. Credit goes to the company's exceptional management. Even in a pandemic, when we weren't spending a lot of time in our cars, the company managed to beat its profit targets with ease. O'Reilly has great future potential as well. Management intends to open approximately 160 new stores every year. This figure corresponds to 3% annual growth of locations. Furthermore, the number of total miles driven in the US is set to continue its positive trajectory, which will increase the demand for repair and maintenance, subsequently increasing the stock price. Another factor that will contribute to its future growth is the share repurchase program. Most companies suspend their buyback during bear markets and recessions to preserve cash and endure the downturn. This strategy decreases shareholders' value. O'Reilly's management, on the other hand, does the exact opposite. They take full advantage of market sell-offs and bear markets to repurchase their shares at full throttle. This increases shareholders' values. In 2020, the company reduced its share count by 5% at opportune stock prices, thus greatly enhancing shareholder value. Looking at O'Reilly's first quarter 2021 results, it has repurchased 82.5 million shares at an average price of $181. As this price is approximately one-third of the current stock price, it's evident that the buyback program of O'Reilly has greatly enhanced shareholder value. When investing, I like to keep a good balance between risky investment and safe investments. OReilly Automotive is my safe investment that has beat the S&P 500 year over year and has netted me a steady profit for quite some time. The next stock I want to mention is AMC. This is a wildcard play. It's very risky, but I do want to mention it so that you guys are informed of it. If your portfolio is already well diversified and you would like to take on additional risk, then AMC is definitely a great opportunity to look into. AMC stock more than doubled over the past 5 trading days, moving from $17.79 to $62.55 at close yesterday, up almost 250%. AMC has caught so much attention recently due to its short squeeze potential. For quite some time now, the AMC stock was beaten down by institutional investors who took on a very strong short position on the company. Shorting a stock basically means that you believe that the price of the stock will go down in value. By shorting, you sell the stock at its current price and buy it back in the future when its price is lower. But what if the price isn't lower when it's time for you to buy it back? Well, in that case, you still have to buy the stock at whatever price it's trading at. This is what causes a short squeeze or a massive increase in stock price in a very short amount of time. Retail investors saw AMC as a potential short squeeze and started buying it. Buying AMC stock increased the stock price, causing institutional investors to buy back the stock at a much higher price, therefore benefiting retail investors. Currently, it's estimated that 89.6 million AMC shares are shorted, or 20% of the 448 million shares. If retail investors are able to pump up AMC's stock price, then AMC stock price will have a massive run-up. But if institutional investors are able to beat down the stock price through legal and illegal ways, then the price will decrease substantially. I am on the side of retail investors and have invested my money into AMC, so it will be exciting to see how this plays out. Remember, the intent of this video is not financial advice and simply my analysis on these companies. I would highly recommend you all to do your own due diligence before investing your money into them. And that wraps it up for today's video. If this video was helpful and gave you a good insight on these companies, then make sure to smash the like button, subscribe to the channel, and turn on bell notifications. It really helps us out a lot. Also, share your opinions in the comment section below. I would love to have a conversation with you all. Until next time, take care and keep investing.